Have you ever felt like you're running on a treadmill, working harder and harder but getting nowhere? You see the stock market hitting all-time highs, your home value going up, but somehow, affording daily life feels tougher. This isn't just a feeling, it's a reality a lot of us are living through, and it's what I call the great illusion. Many people are looking at the economy today and getting flashbacks to 2008. They see the warning signs, the volatility, and they're bracing for a crash. But what if I told you the ghost of 2008 is distracting you from the real danger? The problem isn't a market crash in the traditional sense. The real disease is the silent erosion of our money's value. We are not in a market collapse. We are in a reverse collapse. Let me explain. When you look at the S&P 500, it looks like it's going to the moon. But what happens when you price it not in dollars, but in something with real scarcity, like gold? The chart looks very different. The gains shrink dramatically. What if you price it in Bitcoin? The trend completely reverses. This is the denominator effect. Your assets might be going up in dollar terms, but if the dollar itself is losing value faster, you're actually getting poorer. Think of the M2 money supply, the total amount of money in circulation, as a giant ocean. Since 2020, a tidal wave of new money has been printed and flooded into this ocean. When this happens, everything priced in that currency gets lifted up. Stocks, real estate, everything. It looks like growth, but it's just inflation. Your wealth isn't growing. The measuring stick is just shrinking. This brings us to something called the Cantillon effect. When new money is created, it's not distributed equally. It goes to the big banks and financial institutions first. They get to spend it before prices have adjusted upwards. By the time that money trickles down to the rest of us, to the middle class, prices for gas, groceries, and housing have already skyrocketed. We are left catching up, running faster on that treadmill just to stand still. This is how the wealth gap widens. We are all working for a currency that buys a little less every single day. Let's look at history. Since the Federal Reserve was created in 1913, the US dollar has lost over 96% of its purchasing power. What was once the safest financial strategy, saving your money in a bank account, has now become a guaranteed way to lose. Your savings are melting away like an ice cube on a hot summer day, victim to the purchasing power death spiral. So, what's the escape route? How do you get off this treadmill? The answer lies in shifting your mindset from seeing money as a medium of exchange to finding a true store of value. This is the lifeboat strategy. We need to move our wealth out of things that can be printed into oblivion and into assets that are finite and scarce. What are these assets? Historically, real estate has been a great hedge against inflation because they're not making any more land. Owning shares in productive companies, equities, means you own a piece of a business that can raise its prices to keep up with inflation. And then there's the new kid on the block, Bitcoin. It represents digital scarcity, a monetary network with a fixed supply that no central authority can inflate away. It's a potential lifeboat in the digital age. The choice we face is stark. We are at a critical juncture in financial history. We can continue holding onto a depreciating currency, essentially holding the bag as our purchasing power evaporates. Or we can take control, understand the game being played, and position ourselves to own a piece of the future. The illusion is powerful, but reality is catching up. It's time to choose your lifeboat. Thanks for watching. If this video opened your eyes, make sure to like, subscribe, and hit that notification bell so you don't miss our next deep dive. Let me know in the comments what hard assets you believe in. See you next time.